The US dollar, that little green piece of paper that's become the backbone of the global economy, the trusted medium of exchange, the symbol of wealth, stability, and power. But as we stand on the precipice of a new financial era, the question lingers in the air like a storm cloud, darkening the horizon. Will the US dollar survive the inflation crisis? Will it continue to hold its place at the helm of global finance? Or will it crumble under the weight of reckless spending, debt, and financial mismanagement? It's a question that doesn't just concern the powerful, the politicians, or the bankers. It concerns you. It concerns your wealth, your future, your financial stability. Because when the dollar falters, it doesn't just hurt the markets, it hurts us all. It hurts our savings, our investments, and the future we've worked so hard to build. Many of us have been told that the US dollar is the world's safest asset, the one thing you can count on when everything else falters. But what happens when that foundation begins to shake? What happens when the dollar, once a symbol of power, becomes a symbol of its decline, a reminder of the unsustainable path we've been following for far too long? You don't need to look far to see the writing on the wall. Inflation is creeping in silently, insidiously eroding the value of money. Each passing year, your dollar buys you less. Prices climb, wages stagnate, and the gap between the haves and have-nots widens. For decades, the dollar has been the reserve currency of the world. But now there's talk of alternatives. China, Russia, even small emerging markets, they're all exploring ways to divorce themselves from the dollar. And while the US government continues to print money at unprecedented rates, we must ask ourselves, what happens when the bill comes due? You see, inflation isn't just a number on a chart. It's a silent thief that slowly robs us of our wealth. You may not feel it today, but in the long run, inflation acts as a slow erosion of your financial power. What you could have bought a decade ago with 100, you can barely afford today with 150. It's a reality we face, and it's a reality that's becoming harder and harder to ignore. But here's the truth. No one can predict the future with absolute certainty. And yet, there are patterns, there are warning signs, there are lessons from history that can help us understand what's coming. As we stand at the crossroads of this inflation crisis, we have a choice to be passive observers of our financial fate or to be active participants in shaping the future of our wealth. In the world of investing, those who succeed are not the ones who wait for things to happen. It's those who see the storm coming and adjust their sails. It's those who understand that in times of uncertainty, opportunity exists for those who are prepared. The question is not whether the dollar will survive. The question is, how will you survive and even thrive as it faces the storm? Let me share with you a lesson from my own journey. Many years ago, I made an investment in a company that, at the time, seemed like a risk. The market was uncertain. The economy wasn't in the best shape, and many experts thought the company's future was bleak. But I saw something others didn't. I saw value where others saw volatility. I understood that the future is always uncertain, but it's in that uncertainty that the greatest opportunities are born. The dollar, like any other asset, has its cycles. It has its peaks and valleys. But we are entering a period of inflationary pressures and economic uncertainty that will challenge everything we think we know about money, wealth, and security. To make it through, we must remember that patience, long-term thinking, and diversification are our greatest allies. We must learn to look beyond the immediate, to think about the long game, and to invest not just with our wallets, but with our minds. Inflation is a crisis, but like any crisis, it also brings about change. And change, when approached with the right mindset, can be an incredibly powerful tool for those willing to adapt. We must ask ourselves, are we ready for the change? I'm not talking about just surviving the crisis. I'm talking about just thriving through it. About learning how to navigate the storm and use the winds to our advantage. The US dollar may face challenges, but those who are prepared, those who understand the forces at play, can still build wealth. Fear in times of uncertainty, wealth is built by those who have vision. Those who know that it's not the crises themselves that define us, but how we respond to them. The future of the dollar may be uncertain, but the future of your wealth, that is something you have the power to control. The choices you make today, the way you prepare, the way you diversify, These decisions will determine whether you emerge from this crisis stronger, wealthier, and more resilient. As we move further into this discussion, it's essential to understand that as inflation isn't just a monetary issue, it's a psychological one. People have a tendency to forget how fragile our financial systems can be when they feel like everything is working in their favor. For years, the US dollar has been the anchor of the world economy, the bedrock of international trade, the reserve currency that other nations hold as their own store of wealth. But what happens when that confidence begins to erode? Confidence is powerful. It's the foundation of every market, every investment, every economy. When people lose faith in the stability of the dollar, they start looking for alternatives: gold, cryptocurrencies, foreign currencies, even tangible assets like real estate. And when the masses start pulling their resources away from the dollar, the domino effect begins. A currency can't survive without trust, and trust, when it's broken, is incredibly difficult to rebuild. Let me tell you a story about a time in history when trust in a currency evaporated. It was during the Great Depression, when the dollar was tied to the gold standard and the country was struggling under the weight of economic collapse. People didn't just lose their jobs, they lost their faith in the financial system. The dollar became less valuable as the country printed more money to finance its deficits, and inflation ran rampant. The government responded by devaluing the dollar, essentially telling its people, "We can't afford to keep this promise anymore." The value of the dollar fell sharply, and for those who had their wealth tied up in dollars, it was a painful experience. In that moment, the U.S. government took the extreme step of abandoning the gold standard. The dollar was no longer backed by anything tangible, and trust in its long-term stability was shattered. That experience is an important one for us to reflect on today. In many ways, we are seeing history repeat itself. Inflation is running high, and there's more money being printed than ever before. At the same time, the government is increasingly burdened with debt, and there's very little sign of fiscal discipline. The question isn't whether history will repeat itself, it's whether we will make the same mistakes again, or whether we can learn from the past and thus position ourselves wisely for the future. Now, I know this might sound bleak, but there's hope in every crisis. Or with every challenge, there is an opportunity. The question isn't whether the US dollar will survive, it's whether we as investors can adapt to the changing environment. We must understand that the future of wealth won't be built solely on the strength of one currency or one asset class. It will be built by those who diversify, who think long-term, and who understand that the world of finance is in a constant state of change. Inflation, by its very nature, is a buyer's wealth destroyer, but it's also a wealth creator for those who know how to protect themselves. Diversification is key. You cannot afford to have all your wealth tied up in one asset class, especially one that is subject to inflationary pressures like the dollar. Gold, foreign currencies, cryptocurrencies. These are all assets that have historically hedged against inflation and offer us a chance to protect and grow our wealth, even when the dollar falters. There's a reason people flock to golds in times of crisis. It's tangible. It's been used as money for thousands of years, and it holds intrinsic value. Bitcoins and other cryptocurrencies are offering new alternatives, digital assets that are decentralized and outside the control of governments or central banks. In fact, Bitcoin is often called digital gold because, like gold, it is seen as a store of value in times of uncertainty. But it's important to understand that diversification isn't just about holding different types of assets. It's about understanding that in every crisis, opportunities emerge. For every market that is struggling, there's another that's thriving. The key to surviving the dollar's decline isn't just about holding on to assets that protect against inflation. It's about finding the opportunities that come with the changing landscape. Think back to the early 2000s when real estate was a hot investment. At the time, many people laughed at those who were buying property, thinking it was overpriced and unstable. But those who believed in long-term value and understood the cyclical nature of markets ended up making a fortune when the housing market recovered and boomed in the years after the Great Recession. Similarly, if the US dollar continues to lose value, there will be opportunities. in other currencies and asset classes that are less affected by inflation. The savvy investor will see this as a chance to diversify into markets and assets that are poised for growth, even as the dollar struggles to maintain its dominance. It's about positioning yourself not for the immediate gains, but for the long-term preservation and growth of wealth. As inflation continues to erode the purchasing power of the dollar, those who fail to adapt will feel the pain. But those who embrace diversification and think beyond the dollar will have the opportunity to thrive. It's not just about surviving the crisis. It's about leveraging the crisis to create something even greater. Now, let's shift our focus to the broader picture. Inflation is a silent force, and it's one that we, as investors, must understand deeply if we are to protect and grow our wealth. It's a force that moves like the tide. You may not see it day to day, but over time, it erodes the shore. The longer you wait to recognize its impact, the harder it becomes to navigate the storm. But here's the thing, inflation isn't just about rising prices. It's about the change in values. As I've mentioned before, inflation acts as a slow-burning wealth destroyer. But it also creates something powerful, an opportunity for those who understand how to navigate It's easy to get caught up in the day-to-day volatility, to react emotionally to market shifts and government policies, but the real challenge and the real opportunity lies in our ability to think long terms. In the face of inflation, what we need is not panic, but patience. Investing isn't about getting rich quickly, it's about creating wealth steadily, building it over time brick by brick. As the dollar loses value, you may see your assets fluctuate in the short term. But if you have the right mindset and the right strategy, those fluctuations will become temporary setbacks. Here's not permanent losses. Here's where the real test of character comes in. The world is filled with short-term thinkers, those who react to every twist and turn of the market, who try to time the next big swing. They're chasing profits in the moment, but they don't have the patience to see the big picture. The real winners, the ones who succeed over the long run, are those who understand that wealth is built over time. They're the ones who ride out the storms, understanding that every crisis carries within it the seeds of opportunity. One of the most critical mistakes I've seen in investing is the obsession with instant results. We live in a world where everything is available at the push of a button, where success is often measured by how quickly you can turn a profit. But the reality is real wealth takes time to build. Patience is your ally, but it requires discipline and the ability to look beyond the immediate noise. For example, let's talk about our real estate. Over the years, real estate has proven to be one of the most reliable ways to build wealth. But ask anyone who has made a fortune in real estate, and they'll tell you the same thing. It didn't happen overnight. The most successful real estate investors understand that the value of property increases not just because the market is good, but because over time, land appreciates. They understand that while there may be dips and peaks in the market, the long-term trend is one of growth. They buy with the future in mind, not with the hope of flipping a property for a quick profit. This is exactly how you should approach your investments in times of inflation and uncertainty. Don't get caught up in short-term volatility. A focus on the long term. Inflation may be eroding the value of the dollar, but it's also creating opportunities to invest in assets that will hold or increase their value over time. Gold as real estate, are stocks in companies with strong fundamentals. These are all examples of assets that have stood the test of time. They're not immune to short-term fluctuations, but over the long term they offer protection against inflation and the erosion of the dollar. Another important lesson I've learned over the years is the value of investing in what you understand. If you're uncertain about the future of the dollar, if you're unsure about the next big thing in the markets, take a step back. Don't be tempted by the latest trend or the newest hot tip. Stick to what you know. If you have confidence in real estate or gold or even a well-managed stock portfolio, then double down on those areas. Knowledge is power. And the more you understand about your investments, the better you'll be able to ride out the storms when they come. This is particularly important in the face of inflation. As the value of the dollar shrinks, it's easy to fall prey to the fear and uncertainty that surrounds the markets. But the best investors Those who weather the storm and come out stronger are the ones who invest in what they know and trust. They don't get distracted by the noise of the market. They focus on the long-term trends and make decisions based on solid research and vast understanding. Let's also take a moment to reflect on the role of government policies in all of this. It's easy to blame the government for inflation, for the mismanagement of the economy, for the erosion of the dollar. And while there's certainly truth in that, it's also important to remember that as governments are not in control of everything. Inflation is a result of many factors, not just government spending, but global economic trends, technological advancements, and even social changes. We can't control these factors, but we can control how we respond to them. Diversification is a key part of that response. When inflation hits, it's important to have a portfolio that's not overly reliant on one asset class, one currency, or one investment strategy. Diversification spreads your risk, helps you hedge against market downturns, and allows you to capitalize on opportunities as they arise. The future of the dollar is uncertain, but your future, your financial future, doesn't have to be. If you diversify, if you think long-term, and if you invest with knowledge and patience, then you'll be able to not only survive the inflation crisis, you'll be able to thrive in it. As we continue on this journey, let's explore something crucial, the psychological aspect of investing during times of economic uncertainty. I've seen it time and time again. People lose their nerve when the storm clouds gather. When inflation spikes, when the markets dip, when the dollar weakens, fear can paralyze us. But let me tell you, fear is the enemy of wealth, doxa. In moments like these, you must remember that as markets are cyclical. Just as they rise, they will fall, but they will rise again. The key is not to be swayed by short-term emotions, but to maintain a steady hand. I've seen some of the greatest fortunes made by those who could endure through difficult times, who could hold fast when others were panicking and selling. It's about staying the course when others lose their way. Let's talk about a key principle that has been the bedrock of successful investing for as long as we've known, and as buying assets that will withstand the test of time. If you've chosen wisely, if you've invested in solid, tangible assets like real estate, gold, or companies with strong market positions, then these are assets that will eventually recover and even thrive after the storm. I'll share a personal experience. Many years ago, I had the opportunity to buy real estate in an area that was at the time undervalued. The market had just gone through a downturn, and people were skeptical. But I could see what others couldn't. I understood the fundamental star. I understood that despite the temporary downturn, the area was strategically positioned for long-term growth. So I held my nerve and made the investment. Many others walked away, fearing further losses, but in the long run, that decision paid off in a way that far exceeded expectations. You see, the greatest investors aren't the ones who make a quick profit. They're the ones who can see beyond the horizon, who understand that time is the greatest ally when it comes to creating wealth. The world will always throw obstacles in our path: economic crisis, inflation, political instability. But if you stay focused on the long-term vision, if you build a solid foundation of assets that will survive and grow over time, then you are on the path to lasting wealth. But let's not get lost in the idea of waiting for things to get better. For patience isn't about sitting idly by and hoping for the best. It's about making strategic decisions now, decisions that are based on the long-term health of your portfolio. It's about creating value in ways that will allow you to endure whatever challenges may come your way. That's where diversification comes in. Inflation is just one of many risks we face as investors. There are geopolitical risks, market volatility, and even the potential for technological disruption. We don't know what tomorrow will bring, but we do know that having a diversified portfolio will help us navigate through the unknown. Diversification isn't just a strategy, it's a shield. It's the tool that protects us from the inevitable shocks that will come. But remember, diversification doesn't mean spreading yourself too thin. It means making deliberate, thoughtful choices about where to place your money. It means choosing a combination of assets that work together to balance risk and reward. It means understanding the fundamentals of each asset you hold and ensuring that they align with your long-term goals. For example, in an inflationary environment, Some of the best hedges are tangible assets like as real estate, as in gold, and as commodity-based investments. These assets are not as vulnerable to the depreciation of paper currencies like the dollar. They are rooted in something real, something that holds intrinsic value. Real estate, for instance, doesn't just appreciate because the market is hot. It appreciates because land, particularly well-located land, has value that will endure through economic cycles. Gold has been a store of wealth for thousands of years, and in times of inflation, it has historically provided a hedge against currency devaluation. But don't just take my word for it. Look at the world around you. Look at the behaviors of the wealthiest individuals and institutions. They don't rely solely on paper currencies. They understand that tangible assets are their best protection against inflation. And they aren't just investing in them for the short-term returns, they are investing in them as long-term stores of values. You may be wondering, what about stocks? What about bonds? Aren't those the safest places to invest? Well, stocks and bonds can be valuable components of a diversified portfolio. But in an inflationary environment, they come with risks. Stocks can still provide long-term growth, but their value can be eaten away by inflation over time. Bonds, especially government bonds, may seem like a safe bet, but in a world of rising inflation, they can underperform and lose value. The key is our balances. As we've discussed, real estate, gold, and even cryptocurrencies, they all have roles to play in a diversified portfolio. But the real power lies in understanding how to balance these assets to create a portfolio that is resilient, that can withstand the pressures of inflation and the unpredictable nature of the market. One thing is for certain, the dollar will not be the same tomorrow as it is today. Inflation will continue to chip away at its value. But the question is, how will you respond to this inevitable change? Will you be caught off guard, or will you be one of the wise investors who sees opportunity in every crisis? The future is uncertain, but your response doesn't have to be. You have the power to make decisions today that will build the wealth of tomorrow. You have the ability to shape your financial future, not by reacting to inflations, but by preparing for it. And with the right mindset, with the right strategy, and with a steady hand, you can weather any storm and come out stronger on the other side. Now, let's turn our attention to something often overlooked in the world of finance, the human element. When markets falter, when inflation accelerates, and when uncertainty rises, it's easy to forget that at the heart of every financial decision is a person, a human being with hopes, fears, and dreams. And the way you respond emotionally to these market shifts can make all the difference. We've all heard the saying, fizzlers. It's not the markets that make or break you, it's your reactions to them. The truth is, when times are tough, emotions can take over. Fear can drive people to make irrational decisions, and greed can tempt them to chase short-term gains at the expense of long-term stability. The key to enduring an inflation crisis or any financial storm is to keep a level head, to approach investing with calmness and clarity. But how do you do that? How do you maintain your composure when the world around you seems to be falling apart? It starts with understanding one fundamental truth. You are in control of your reactions. When you feel the pressure mounting, when inflation is making everything more expensive, when the value of your investments is fluctuating, take a step back. Take a deep breath and remind yourself this too shall pass. The markets will go through cycles, and while no one can predict exactly when the next downturn will occur, we can be sure of one thing. The future is always uncertain, but there will always be opportunities for those who keep their heads. I often think about the great investors of the past, those who built immense wealth in times of crisis, in times of economic upheaval. They didn't do so by panicking. They did so by thinking long-term, by being patient, and by sticking to their principles when everyone else was running in fear. They didn't let inflation or economic turmoil dictate their actions. They let their own judgment and strategy guide them. One of the most important habits of successful investors is the ability to tune out the noisy. There is always someone on the sidelines shouting about the next big crisis, the next great collapse, the next investment trend. And while it's essential to stay informed, it's also crucial to remember that the people who are successful in the long run aren't the ones reacting to every bit of news or market movement. They are the ones who can block out the noisy, focus on their long-term goals, and make decisions based on what they know, not what they fear. This is especially true when it comes to inflation. Inflation, by its very nature, creates uncertainty. It causes prices to rise, erodes purchasing power, and forces us to question the stability of our financial systems. But in times like these, it's easy to get swept up in the panic, to feel like everything is falling apart. And yet, this is precisely when the best opportunities often arise. When others are fearful, when the markets are uncertain, there are always the undervalued assets to be found. You have to train yourself to see the opportunities when everyone else is blinded by fear. Inflation, in many ways, is like a storm. It brings chaos and confusion. But for those who can see clearly through the clouds, it offers the chance to pick up valuable assets at a discount. And how do you see clearly when the storm rages around you? It comes down to education. Fifth, knowledge is your anchor in times of financial uncertainty. The more you understand about the forces driving inflation, about how markets respond to different economic events, about how to hedge your portfolio and manage risk, the more you'll be able to navigate these turbulent waters with confidence. The key to success in investing and in life is adaptability. When the dollar loses value, when inflation rises, when everything seems to be in flux, the person who thrives is the one who can adapt to the new environment. That means learning to diversify your investments, to hold assets that will stand the test of time. It means being willing to rethink old assumptions, to challenge the status quo, and to remain flexible in your approach to wealth building. But adaptability doesn't mean reckless decision-making. It means taking calculated risks, weighing the pros and cons, and making decisions based on long-term vision. I've always believed that the most successful investors are those who can make decisions based on rational thought, not emotional impulses. And in times of economic uncertainty, like the inflation crisis we're facing, it's especially important to keep your emotions in check. Think about the role of self-discipline. It's easy to be swayed by short-term fluctuations, to let your emotions drive your decisions. But the wealthiest individuals and the most successful investors I know are the ones who can remain ever disciplined in the face of volatility. They stick to their strategy, they stay true to their long-term goals, and they don't let fear or greed dictate their actions. At the end of the day, inflation and economic crisis are just another part of the market cycle. And the sooner we can embrace that reality, the sooner we can take control of our financial destiny. Because while we cannot control the forces of inflation or the movement of the dollar, we can control how we respond. And that response, that ability to remain calm, to think rationally, and to adapt strategically, will determine our success in the years to come. As we come to the final part of this conversation, it's time to reflect on the bigger picture. We're living in unprecedented times, and it's easy to feel overwhelmed by the noise and the chaos. But amidst all the uncertainty, there is a quiet, undeniable truth, because you have the power to shape your financial future. The U.S. dollar may be under pressure, inflation may be rising, and the financial landscape may be changing rapidly, but the fundamental laws of wealth creation remain the same. Wealth is built through smart decisions, discipline, patience, and a clear vision for the future. The question isn't whether the dollar will survive or if inflation will continue to eat away at our purchasing power. The real question is, what will you do in response? As we've explored, the key to thriving in uncertain times is diversification. By spreading your wealth across different asset classes, real estate, precious metals, equities, and even emerging technologies, you build a portfolio that's resilient to inflation and economic shifts. It's not just about protecting your wealth, it's about growing it. The opportunity is in understanding that, even when one asset class falters, others will rise to fill the void. But diversification isn't just about holding different types of assets. It's about creating a portfolio that aligns with your values, with your long-term vision for wealth. It's about understanding that your true wealth doesn't come from simply accumulating more money. It comes from creating the life you want, from having the freedom to live on your own terms. The dollar may not be the cornerstone of the global economy forever, and inflation may continue to chip away at the value of paper money, but your wealth doesn't have to follow the same trajectory. As wealth is not about relying on one currency or one asset class, it's about understanding that money is a tool that can be used to create opportunities, to build legacy, and to make an impact. As we face the potential collapse of the dollar's dominance, it's important to remember that change is inevitable. Every empire, every currency, every financial system eventually faces its moment of reckoning. But the most powerful investors and wealth creators throughout history have been those who embraced change. They didn't fight the inevitable, they adjusted, they adapted, and they used it as an opportunity to grow. Look at the wealthiest individuals today. They didn't build their fortunes by relying on any one system. They diversified their investments, they made calculated risks, and they understood that the future is unpredictable. They didn't place all their bets on the US dollar, and they didn't sit idle when times got tough. Instead, they leveraged the opportunities that came with uncertainty, and through patience, discipline, and their visions, they emerged stronger and wealthier than ever. So, the future of the US dollar, while uncertain, is only a part of the story. Your wealth, and more importantly, your mindset, is what will carry you through these times of change. You don't have to be at the mercy of inflation or a declining currency. You can choose to thrive. It's all about how you prepare, how you think, and how you act. Don't let fear guide your decisions. Let your vision guide you. Let the principles of long-term thinking, diversification, and patience be the foundation of your financial strategy. When you look back, you'll see that the real wealth was never in a single currency or a single asset class. It was in your ability to adapt, to diversify, and to remain calm amidst the storm. And that is the real power, the power to control your financial destiny. The power to create wealth not just in the good times, but through the most uncertain of circumstances. The power to remain resilient, to hold your course, and to build something that will outlast the storms of the financial world. As you move forward, remember that wealth is not a race. It's a marathon. It's about making smart, thoughtful decisions each day. It's about understanding the game, and most importantly, it's about building a future that is not just financially secure, but also full of purpose and meaning. The dollar may face its challenges, but your wealth is in your hands. And it is through the choices you make today that you will create the future you desire. This is not the end of the journey, but the beginning. You have the power to shape your financial future. Thank you for joining me. Take control, adapt, and thrive.